Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I given the forecast for this week, 8th to 12th of August, on 8th of August, Monday, during my Asian session live market analysis of the forecast webinar. And today we are on 12th, Friday, between 5 and 5:30 GMT. I'll review during this Asian session live market analysis and forecast webinar what happened to that of the market, whether the market has moved in line with that of the expected market moves or against. So let us review it. So for that, first of all, we have to review the forecast. Then followed by that, we'll do the market reading for today and try to understand what the players intend to do. And also I'll briefly touch upon the trading strategy for the trade call. Now with regard to the forecast, they just made the gaining move initially till Tuesday. Then from Monday, Wednesday, late European session, they started making the slide. Instead of a rise, here they made the slide. Then they dipped, and then again yesterday they made the slide and firmed up nominally. Today they are expected to make the gaining move. Let us see from that of the European session. If they do it, then the market is moving in line with that of the expected market moves. Now, during that of the Japanese session, they are expected to make a swing and slide. And all along from yesterday, they have been making the slide in the case of GBP, and now they are doing it in the case of Euro, and gaining the level in the case of USD as the USD gaining move. But if you look into that of the net changes, we are able to understand that all the three currencies are showing positive net change, indicating that yen crosses, they are slowly gaining along with that of USD. Besides, you come across the commodity pairs, USD CAD and Australian dollar, both are showing negative net change. So that means the players are handling the yen and yen crosses and also the commodity crosses. So that is how they are doing it at the given time. After handling the crosses, they will come to that of the majors during that of the European session. So now looking into that of the range in which the currencies are expected to swing, it has become very, very nominal. From that of 1.1071, they gained it up to 1.1191, just about 120 pips swing they are doing it in the market. And so it shows that either there should be lack of participation from that of the traders, so that the players don't find any necessity to gain big and try to trap the traders, or the traders are doing either way trades. That is, after the gain they buy, or after the drop they sell. That sort of trades the traders might be doing it, and because of that there might be a situation of this nature, a prolonged sideways move for a week. Then in the case of yen, 101.03 was the low they set, and then they gained it to 102, and then they gained it to 102.20, up to 102.53 they gained it in this week. Again here you come across about 150 pip swing. And in the case of GBP, 1.2937 they just showed and went up to 1.3097. And here again you come across about 150 pips swing. And in the case of CHF also, it is around 120. Then in the case of Canadian dollar, they made from that of 1.32 to 1.2963 level. So they made a somewhat relatively a big move in the case of Canadian dollar. Similarly, in the case of Australian dollar, they made a bigger move of 200 pips, and when compared to that of the rest of the pairs. So which shows very clearly that they are focused on that of the commodity crosses and commodity pairs to start with in this week. Then afterwards they will come to that of the yen crosses from next week. At that time they could gain aggressively USD yen and also gain the levels in the case of euro and GBP steadily from next week. The upward trending move could be seen during that particular time. So that is what we are able to derive from that of the levels. Now, with regard to the market reading, I noted down the initial lows and the highs around 3:30 GMT, and now we are trying to compare with that of the current market level. In the case of euro, 1.1131 is the low, 1.1143 was the initial high. They just breached it by 2 pips, and they are holding closer to the high. In the case of GBP, 2950 and 2978 are the lows and the highs. They are not breached. In the case of yen, 101.77, 102.20 are the lows and the high. Lows and the high, they are not breached it. And CHF, 97.47, they just breached it by 1 pip. And 97.60 is not breached. So in the case of euro, they just breached the high by 1 pip. In the case of CHF, they breached the low by 1 pip, indicating that they wanted to make the USD weakening move. Then, in the case of Canadian dollar, 1.2976 was the initial low. They just breached it, came down to 1.2967, and they are holding around that. So they intend to make a slide further in the case of USD CAD. Then 2994 is the high, which is not breached. So if you see carefully, from that 1.3190, they started slowly coming down with swings during this particular week. So they have been handling Canadian dollar in a big way on the downside. Then in the case of Australian dollar, 0.76. It's not displaying it. Okay, 0.7671 is the low and 7704 is the high. They are not breached the low or the high. So here you come across that only in the case of euro, CHF and Canadian dollar, they made the moves. So it shows very clearly the commodity pairs they wanted to handle, the commodity pairs and their crosses. Besides, they wanted to handle euro and CHF. So probably they could make a nominal consolidation in the case of USD yen and GBP to start with. And later on from that of the European session, they could gain the levels in the case of USD yen also and GBP. So the contrarian move could continue later on during that of the day from that of the European session. So first they will handle the commodity pairs and the commodity crosses. This is what we are able to read what their intentions are. Now with regard to the trades, so I will just keep a buy limit order 1 pip above that of the initial high. Low 1.1132 a buy limit order and 1.2951 a buy limit order. If it is not filled during that of the late Japanese session because they are expected to make a swing and slide, then we will modify and buy it at the market, and later on they are expected to gain the levels. We'll be able to get the profit out of that. Similarly, during that of the late session, when they are gaining the levels and when they are dropping, they could gain the levels in the case of USD yen, or they may just start making a downward move in the case of USD yen before making next rise and breach the high as a false move. At the time, we can capture the position closer to that of the low. So these are all the trade recommendations I have given here. And we can keep the hedge order to limit the risk. And in the event, if it is hedged, if the market reverses, we will watch the hedge for about 10 to 30 minutes. So if you become an experienced trader, within 10 minutes, you'll be able to judge whether it is going to really continue to make loss, or it is just during the stop and it is filled, or during the extended move it is filled, we will be able to judge it. Because once they form the new low, they will not breach the new low for more than 10 minutes up to 30 minutes, and then slowly they will just reverse the market and take it upward again. So a quick downward move as an extended move and then continue to rise. So such quick moves we'll be able to judge whether they are going to continue to breach the new low or not. Then accordingly we can close the hedge with a profit also if it is hedged, and then continue to trade with the buy side. So that way, we will be able to do either way trades in the market. But the players appear that they have just done the consolidation and also holding low. They tested the patience of the traders, and slowly they are expected to gain the levels during the day. And basically, as we have learned it, that they are handling the commodity pairs now. The commodity crosses like the Australian dollar, CAD, and this sort of commodity crosses also they are handling it, because Australian dollar is showing the USD gaining move and USD CAD is making the USD weakening move. It is a big contrarian move. They are doing it in order to handle the crosses. Now these are all the market timings. So there are 3 sessions in a day, and each session is subdivided into the early, mid, and the late sessions. In between sessions, you come across the gap time. The timings of the sessions are given here. It is a 24 hours market, so they continue to handle the majors and the crosses alternatively, and they handle only 2 pairs at a given time, as they have to pay margin for taking positions in a huge way. So they will not be able to handle all the currencies simultaneously, and they will only handle 2 pairs at a given time and try to create the market sentiment, and then suddenly liquidate those positions and take positions in other currencies. That way they try to act against the sentiment created and also try to deceive the traders and earn money from that other market. So if they want to earn money from that other market, they have to do a cunning act against that of the traders. That is what day in and day out they are doing it. And also a pair which has made more than 40 pips spread between the low and the high, they are handling. The other pairs, like for example euro, it is just hardly about 14 pips they have made the spread. That shows that they are simply holding it. So they will increase the spread. How? If they want to gain, they will come down and hit the stops below that of the initial low, or make a false move up to that of the low and then reverse the market. That is why 1 pip above that of the initial low, I kept the buy limit order. In the event of such false move, we will be able to get a definite fill. Then afterwards, they rise and breach the high and stay above there for 30 minutes and continue to gain the levels. So this is the trend. They do it on a daily basis. So you have to follow it when they are doing it. When they will be doing it, once the volume improves in the market, they will start making the moves. Till such time, they will make only a small swing of 1 pip, 2 pip, and things like that. And it might appear the market is weak and things like that. But the players want to earn money. But for that, the traders should participate and take positions. Only then they can lose and the players can earn money. So they are waiting for the traders to commit positions. And that is why you come across a consolidation. It is a question of how traders are being attracted. So the players have to see on a daily basis that the traders are attracted. Like a gambling den, the traders should be attracted towards that of the trading platforms. So only then the trading platform, the traders will be able to take positions, and also through banks. Then later on, the players can act against them. So besides, also they want the traders to participate in the derivative market, futures and the options. So slowly they will make the swing, or slowly they will pretend as if the euro is not able to breach above the resistance or not able to go below that of the support, etc. So that the traders will commit the futures and the options positions. That is why you come across always in various websites and other analysts, they continue to say that euro is not having enough strength, or it is USD CAD which is dead cat bounce back, etc. These sort of phrases are being used mainly in order to create the market sentiment. And so after creating the sentiment, it is not enough. The traders need to commit the positions. So that is why they use new phrases from time to time in the market, so that the traders find that, okay, it is going to be a bull market, or it is going to be a currency war, or a bear market, etc. Then accordingly, they will develop the sentiment and commit the positions. If you got any doubt, kindly ask me in the question and answer window. I'll be willing to answer to those questions. So when you look into the forecast, you find that they are expected to make the rise, consolidation and the rise, but the significant rise is not happening. They are making either way moves alternatively in the currencies. That shows that they are handling the crosses in a big way. So they want, probably the traders are committing more positions in crosses rather than majors. That is why the players are also focusing on the crosses, especially the commodity crosses. That is why they are bringing in significant contrarian move in the case of the commodity crosses. And also, many were thinking that oil market is going to be doomed and it is not going to be there, and that sort of feel they created, and oil is going to be very, very sluggish, etc. And suddenly they started gaining it. So this is the way they create the sentiment and induce the traders to dissect the positions when they find that such positions are not making profit and it is simply a heavyweight holding. Then subsequently they find that there was such a significant rise, but they did not have the position. So test the patience and punish the traders or the strategies of the players. So we should avoid getting tested. How? We have to identify the correct pair and enter into the market. And simply we should not say that I got some liking for euro or I got some liking for USD and etc. So when you say like that, then you are tempted to take positions, and later on you find it is a non-mover in the market. The momentum is not there. Then it starts testing your patience. Then you repent. Oh, I could have taken a position in GBP rather than euro because GBP has made a significant move. And that sort of feel you develop. Next time you commit in GBP, GBP might be a non-mover, euro might be a mover. So ultimately, you need to understand which pair they are going to handle. For that, you need to find the spread between the high and the low, which is more than 40 pips to participate. Now, if you see euro, GBP, the spread is less than 40 pips. Whereas in the case of USD the spread is more than 40 pips. And here again, CHF, it is less. And in the case of Canadian dollar also, it is less. And Australian dollar is also, it is less. So they are just holding. I mean, they are making, in the case of yen, significant move, followed by that relatively closer, a bigger spread when compared to the rest of the pairs is seen in the case of Canadian dollar and Australian dollar. So try to identify that. You will be able to really capture good profit from the rubber market. If you've got any doubt, kindly ask me the questions. I'm willing to answer the questions. So we could continue to see the gains in the case of euro and GBP during the next week, probably a week in which they handle the crosses. They could come to the majors from next week. Until October, they are expected to gain the levels in the market. and we should be able to see a significant rise during the course of this month. So if there are no questions, then I'll take this opportunity to thank everybody. Okay. I wish to thank FX Trade for the facilities provided to present the webinar, and you people who have come here to listen to the webinar. I'll come back on Monday and give you the forecast for the next week, and probably during the mid-month we'll come across significant trending move coming in the market. So since they handle predominantly the crosses this week, they could do the handling of the majors next week, and we will try to capture some good profit from the other market. So wish you all happy weekend and good trading, and see you on Monday.